What if I told you the most powerful weapon in the world isn't a missile, but a currency? For over 50 years, the United States controlled global money through one system: oil priced in dollars. Every country needed oil, and that meant every country needed dollars. But now, a new alliance is rising. BRICS is building a system designed to break that control, trading oil without the dollar, creating new currencies, and reshaping global power. If they succeed, the world economy could change forever. So the real question is, who will control the future of money? The petrodollar or BRICS? The modern global financial system did not emerge naturally. It was constructed through strategic decisions, geopolitical agreements, and economic necessity. At the center of the system stands the United States dollar, a currency that evolved from being simply national money into the backbone of international trade. The foundation of this dominance is what economists call the petrodollar system, a structure that binds oil markets to the dollar and reinforces its global demand. The turning point came in 1971, when Richard Nixon ended the gold standard. Before that moment, the dollar was backed by gold, giving it tangible value. Once that link was broken, confidence in the dollar could have collapsed. The United States needed a new mechanism to ensure global demand for its currency. That solution came through energy markets. In the early 1970s, the United States formed a strategic agreement with Saudi Arabia. Under this arrangement, Saudi oil would be sold exclusively in US dollars. In exchange, the United States provided military protection and political support. Soon after, other members of OPEC adopted the same pricing system, making the dollar the standard currency for global oil transactions. This created a powerful cycle. Countries needed oil, and to buy oil, they needed dollars. To obtain dollars, they exported goods or held reserves in US currency. This constant demand strengthened the dollar and allowed the United States to expand its financial influence globally. The system also enabled the US to run large deficits without immediate consequences, since global demand for dollars remained strong. Over time, the petrodollar became more than an economic tool. It turned into a mechanism of geopolitical power. The United States could influence global markets, impose sanctions, and shape financial systems through its control of the dominant currency. This level of influence was unprecedented in modern history. However, as global economic power began to shift, cracks started to appear. Emerging economies questioned why a single nation should hold such influence over global finance. Countries like China, India, and Russia began exploring alternatives. These nations sought to reduce dependence on the dollar and create a more balanced system. This desire eventually led to the formation of BRICS. The group represents a growing coalition of economies aiming to reshape global financial structures. While the petrodollar system remains dominant, its long-term future is no longer guaranteed. The stage is now set for a financial transformation. The system that once seemed unshakable is facing its most serious challenge yet. As new alliances form and economic power continues to shift, the question becomes clear. Will the petrodollar maintain its dominance, or will a new system rise to take its place in the evolving world economy? The strength of the petrodollar system lies not only in its origin, but in the mechanisms that sustain it. Over decades, the United States has built a network of financial, political, and military structures that reinforce the dominance of its currency. These structures create a system where the dollar remains essential for global trade, even for countries that may prefer alternatives. One of the most important pillars is the global demand for U.S. Treasury securities. Countries that earn dollars through trade, especially oil exports, often reinvest those dollars into U.S. government bonds. This process recycles capital back into the United States, allowing it to finance spending at relatively low cost. It also strengthens the perception that U.S. financial markets are safe and stable. International institutions play a significant role as well. Organizations such as the International Monetary Fund and the World Bank provide loans and economic guidance to countries around the world. Because these institutions operate largely within a dollar-based framework, they reinforce the currency's central position in global finance. Another key component is the global payment infrastructure. Systems that facilitate cross-border transactions are deeply integrated with the dollar. This makes it easier and more efficient for countries to use dollars rather than alternative currencies. The convenience of existing systems creates inertia, making change difficult, even when nations seek diversification. Military influence also contributes indirectly. The United States maintains a presence in key regions, particularly those rich in energy resources. This presence helps ensure stability in oil markets, which in turn supports the continued use of the dollar in energy trade. Confidence and stability translates into confidence in the currency. However, reliance on the dollar comes with risks for other nations. The United States has the ability to impose sanctions that can restrict access to financial systems. This has led some countries to reconsider their dependence on dollar-based networks. Concerns about economic sovereignty have become more prominent in recent years. Despite these concerns, replacing the petrodollar system is extremely challenging. The dollar benefits from deep liquidity, global trust, and a well-established financial ecosystem. Any alternative must replicate these qualities to succeed. Building such a system requires time, cooperation, and significant investment. This is where emerging alliances come into play. Nations seeking to reduce reliance on the dollar are exploring new frameworks for trade and finance. These efforts are still developing, but they signal a shift in global thinking. The petrodollar system remains dominant today, but its future depends on its ability to adapt. As more countries explore alternatives, the balance of power in global finance may begin to change. The question is not whether challenges exist, but whether they will grow strong enough to reshape the system entirely over time. The rise of BRICS marks a turning point in the global economic landscape. Originally formed as a coalition of emerging economies, BRICS has grown into a platform for cooperation aimed at reshaping international finance. Its members share a common goal: reducing dependence on Western-dominated systems and creating alternatives that reflect a more balanced distribution of power. Each country within BRICS contributes unique strengths. China serves as a global manufacturing hub and a major trading partner for many nations. India brings rapid economic growth and a large population. Russia offers vast natural resources, particularly in energy. Brazil and South Africa provide regional influence and access to important commodities. Together, these nations represent a significant share of global population and economic output. This collective weight gives BRICS the potential to challenge established financial systems. One of its primary objectives is de-dollarization, which involves reducing the use of the US dollar in international transactions. To achieve this, BRICS countries have begun increasing trade in their own currencies. Bilateral agreements allow nations to settle transactions without converting to dollars. This reduces exposure to currency fluctuations and external financial pressures. Over time, such practices could weaken the dominance of the dollar in global trade. The group has also established financial institutions to support its vision. The New Development Bank, created by BRICS, provides funding for infrastructure and development projects. Unlike traditional institutions, it aims to operate with fewer political conditions, offering an alternative source of financing. Another ambitious idea is the creation of a common BRICS currency. While still in early discussion stages, such a currency could facilitate trade within the bloc and provide a viable alternative to the dollar. However, achieving this would require significant coordination and trust among member nations. Technology plays a crucial role in BRICS strategy. Digital payment systems and central bank digital currencies could enable faster and more efficient transactions. These innovations have the potential to bypass traditional financial networks and reduce reliance on established systems. Despite its ambitions, BRICS faces internal challenges. Differences in political systems, economic priorities, and regional interests can complicate cooperation. Building a unified financial framework requires alignment that is not always easy to achieve. Nevertheless, the momentum behind BRICS continues to grow. As global economic power shifts, the group's influence is likely to expand. Its efforts represent a significant step toward a more multipolar financial world. The rise of BRICS does not guarantee the end of the petrodollar, but it introduces a powerful alternative. This evolving dynamic sets the stage for a competition that will shape the future of global finance in profound and lasting ways. Energy markets sit at the center of the struggle between the petrodollar system and emerging alternatives. Oil remains one of the most important commodities in the world, and the currency used to trade it carries enormous influence. For decades, the dominance of the US dollar in oil transactions has reinforced its position as the world's primary reserve currency. Countries within BRICS are increasingly challenging this arrangement. By exploring ways to conduct energy trade in local currencies, they aim to reduce reliance on the dollar and shift the balance of financial power. This effort is gradual but significant. China has taken a leading role by introducing oil futures contracts priced in its own currency. These contracts allow exporters to sell oil without using dollars, providing an alternative pathway for global trade. While adoption is still limited, it represents a meaningful step toward diversification. At the same time, Russia has increased the use of non-dollar currencies in its energy exports. This shift has been influenced by geopolitical tensions and sanctions, which highlighted the risks of relying heavily on dollar-based systems. As a result, new trade arrangements have emerged. The role of major oil producers is critical. If countries such as Saudi Arabia begin accepting multiple currencies for oil, the impact on the petrodollar system could be substantial. Even partial diversification would signal a major shift in global finance. However, replacing the dollar in energy markets is not simple. The existing system offers stability, liquidity, and global acceptance. These advantages make it difficult for alternatives to gain widespread adoption quickly. Any new system must provide similar benefits to succeed. Infrastructure is another important factor. Financial markets, payment systems, and regulatory frameworks must evolve to support new currency arrangements. This requires investment and coordination among multiple countries, which can slow progress. Despite these challenges, the direction of change is evident. More nations are exploring ways to reduce dependence on a single currency. This trend reflects broader shifts in global power and economic relationships. The battle for energy and currency is not just about economics. It is also about sovereignty and control. Countries want greater independence in managing their financial systems and trade relationships. This desire is driving innovation and experimentation in global finance. As these efforts continue, the balance between the petrodollar and emerging systems will evolve. The outcome will shape how energy is traded and how financial power is distributed. The stakes are high, and the implications extend far beyond oil markets into the broader structure of the global economy. A shift away from the petrodollar system toward a more diversified financial order carries significant risks and consequences. While the potential benefits of greater balance and independence are appealing, the transition itself could introduce instability into the global economy. Understanding these risks is essential to evaluating the future of money. One of the most immediate concerns is market volatility. The current system provides a level of predictability that businesses and governments rely on for planning and investment. If the dominance of the dollar weakens rapidly, financial markets could react unpredictably. Exchange rates might fluctuate more frequently, increasing uncertainty in global trade. Developing economies could be particularly vulnerable. Many of these countries depend on stable currency relationships to manage imports, exports, and debt obligations. Increased volatility could raise the cost of borrowing and complicate economic planning. This could slow growth and create additional financial pressure. For the United States, a decline in dollar dominance would have major implications. The ability to finance government spending at low cost is closely tied to global demand for the currency. If that demand decreases, borrowing costs could rise. This would force adjustments in fiscal policy and potentially impact economic growth. On the other hand, countries within emerging alliances could gain greater control over their financial systems. Reducing reliance on the dollar allows them to pursue policies without external constraints. This could enhance economic sovereignty and resilience. However, building a new system comes with its own challenges. Trust is a critical factor in any financial framework. Nations must have confidence in each other's currencies and institutions. Without trust, adoption of alternative systems will remain limited. Global institutions may also face pressure to adapt. Organizations like the International Monetary Fund could need to reform governance structures to reflect a changing balance of power. Such reforms are complex and often politically sensitive. Technology introduces both opportunities and risks. Digital currencies and blockchain systems could make transactions more efficient and transparent. At the same time, they raise concerns about regulation, security, and control. Governments will need to address these issues carefully. The transition to a new financial order is likely to be gradual. Incremental changes in trade practices, reserve holdings, and financial infrastructure will shape the process over time. Sudden shifts are less likely, but cannot be ruled out entirely. Ultimately, the global impact will depend on how well this transition is managed. Cooperation between nations will be essential to minimize disruption and maintain stability. The path forward is uncertain, but the choices made today will influence the structure of the global economy for decades to come. The question of who will control the future of money does not have a simple or immediate answer. Rather than a clear victory for one side, the outcome is likely to involve a gradual evolution toward a more complex and diversified system. Both the petrodollar and emerging alternatives will play roles in shaping this future. The existing system, built around the US dollar, remains powerful. Decades of trust, deep financial markets, and global integration give it advantages that are difficult to replicate. The infrastructure supporting the dollar is extensive, and many countries continue to rely on it for trade and reserves. At the same time, the rise of BRICS reflects a growing desire for change. These nations are working to create systems that offer greater independence and reduce reliance on a single dominant currency. Their efforts are gradually gaining traction. A likely outcome is a multipolar financial world. In this scenario, the dollar would remain important but share influence with other currencies. The Chinese yuan, regional currencies, and potentially a BRICS-backed currency could all play significant roles. This diversification would reduce the concentration of power in any one system. Practical considerations will drive adoption. Countries will choose currencies and systems that offer efficiency, stability, and reliability. Ideological preferences alone will not determine outcomes. Economic incentives will play a decisive role in shaping behavior. Technology will accelerate change. Innovations such as digital currencies and advanced payment systems could transform how money is used and transferred. These tools may lower barriers to entry and allow new systems to compete more effectively with established ones. Geopolitical dynamics will also influence the future. Alliances, trade agreements, and conflicts will shape financial relationships. Economic power and political influence are closely linked, and shifts in one area will affect the other. For businesses and individuals, a more diversified system could bring both opportunities and challenges. Increased competition among currencies might lead to better services and lower costs. However, navigating multiple systems could require greater understanding and flexibility. The transition will not happen overnight. It will unfold over years, driven by incremental changes and strategic decisions. The pace of change will depend on economic conditions, technological advancements, and political developments. In the end, control of the future of money will not rest with a single nation or group. It will emerge from the interactions of many players, each pursuing their own interests. The result will be a financial system that reflects a more balanced and interconnected global economy. The battle between the petrodollar and BRICS isn't just about money. It's about power, control, and the future of the global economy. The dollar still dominates today, but the cracks are growing. And for the first time in decades, the world is seriously preparing for a system beyond it. So whether the future belongs to one currency or many, one thing is certain: the financial world you know today is already changing. If you want to stay ahead of global power shifts, economic wars and the future of money, subscribe now, because the next financial revolution has already begun.